The global motorcycle market is on the brink of an unprecedented downturn, a situation that could see motorcycle prices plummet by as much as 76%. This would mark the most significant crash in the history of the motorcycle industry, shaking its foundations and altering the landscape for manufacturers, dealers, and consumers alike. Such a drastic shift has not been seen in our lifetime, and it prompts an urgent need to understand the underlying causes, potential impacts, and the future of motorcycling as a whole. Before we start, hit the like and subscribe buttons for more exclusive news. The impending crash in motorcycle prices can be traced to a confluence of factors, each of which has been intensifying over the last decade. The first and perhaps most critical factor is the rapid technological evolution within the transportation sector. Electric vehicles, EVs, once a niche market, are now at the forefront of the automotive industry's transformation. Companies like Tesla have revolutionized consumer perceptions of electric mobility, and this wave is now crashing into the motorcycle industry. Traditional internal combustion engine, ICE motorcycles are increasingly seen as outdated relics, especially as governments worldwide push for greener alternatives through subsidies, incentives, and stringent emissions regulations. These changes are not just affecting consumer sentiment, but are also putting immense pressure on manufacturers. Companies like Harley-Davidson, Honda, Yamaha, and Ducati, which have long dominated the motorcycle market, are being forced to rethink their strategies. Harley-Davidson, known for its powerful and iconic cruisers, is facing a particularly tough time. The company has seen declining sales for years as its core customer base ages and younger generations show less interest in large, gas-guzzling bikes. While Harley has made moves to enter the electric motorcycle market with models like the Livewire, it remains to be seen if this will be enough to save the brand from the wider market decline. Meanwhile, Japanese manufacturers like Honda and Yamaha, who have a diverse portfolio ranging from affordable commuter bikes to high-performance sport motorcycles, are also feeling the pinch. Honda, for instance, has invested heavily in developing electric motorcycles and scooters, such as the PCX Electric. But the transition from ICE to electric is proving costly and complicated. Yamaha has also ventured into electric mobility with models like the E01, but the shift is slow and the market remains uncertain. The problem is compounded by the fact that developing countries, which have traditionally been large markets for these manufacturers due to their affordability and practicality, are also starting to embrace electric vehicles, further reducing demand for traditional motorcycles. Adding to these woes is the economic uncertainty that has gripped the world in recent years. The COVID-19 pandemic dealt a significant blow to global economies, disrupting supply chains, reducing disposable incomes, and shifting consumer priorities. The motorcycle industry, which relies heavily on discretionary spending, was hit hard as consumers tightened their belts. Although there was a brief surge in motorcycle sales as people sought socially distant forms of transportation during the pandemic, this boost was short-lived. As the world emerges from the pandemic, economic recovery remains uneven, and inflation is eating into the purchasing power of consumers, making them less likely to invest in non-essential items like motorcycles. Moreover, the global semiconductor shortage, another fallout from the pandemic, has exacerbated the situation. Modern motorcycles are increasingly dependent on electronic components, from sophisticated engine management systems to advanced rider aids like ABS and traction control. The shortage of semiconductors has led to production delays, reduced inventory, and higher prices for new models, further dampening demand. For instance, brands like BMW and KTM, known for their technologically advanced bikes, have struggled to meet production targets, resulting in longer waiting times and frustrated customers. Environmental concerns are also playing a significant role in this market downturn. As climate change becomes an increasingly urgent issue, there is growing pressure on industries to reduce their carbon footprints. The motorcycle industry, traditionally reliant on fossil fuels, is facing criticism for its contribution to greenhouse gas emissions. This is leading to stricter regulations on emissions and fuel efficiency, particularly in Europe, where the European Union's Euro 5 standards have made it more challenging for manufacturers to sell ICE motorcycles. These regulations not only increase production costs, but also limit the types of motorcycles that can be sold, making it harder for manufacturers to maintain profitability. Additionally, there is a cultural shift happening that is influencing the motorcycle market. Motorcycling, once seen as a symbol of freedom, rebellion, and individuality, is losing its appeal among younger generations. Millennials and Generation Z, who are more environmentally conscious and less interested in owning vehicles, are not as drawn to motorcycles as previous generations were. Instead, they prefer alternatives like public transportation, ride-sharing, or even electric bicycles and scooters. This shift in consumer preferences is eroding the traditional customer base for motorcycle manufacturers, making it difficult to sustain the market. Another critical factor contributing to the looming market crash is the rise of the second-hand motorcycle market. As economic conditions worsen and new motorcycle prices rise due to inflation and production costs, more consumers are turning to used motorcycles as a cost-effective alternative. The proliferation of online marketplaces like eBay Motors, Craigslist, and specialized platforms like CycleTrader has made it easier than ever for buyers and sellers to connect, further undermining new motorcycle sales. This trend is putting additional downward pressure on prices as the supply of used motorcycles increases, particularly as older riders, the core demographic for brands like Harley-Davidson, begin to sell off their bikes. The effects of this market downturn are already being felt across the industry. In the United States, Harley-Davidson has been forced to scale back its production and workforce, closing factories and laying off workers in response to declining sales. The company has also had to slash prices on some of its models to stimulate demand, but these measures have only provided temporary relief. Similarly, in Europe, manufacturers like Ducati and Triumph are struggling to maintain their market share as consumers increasingly opt for cheaper, more environmentally friendly alternatives. Even the burgeoning electric motorcycle segment, which many hoped would be the industry's savior, is not immune to these challenges. High development costs, limited range, and a lack of charging infrastructure are significant barriers that are preventing widespread adoption of electric motorcycles, keeping prices high and sales low. The situation is no better in Asia, which has historically been the largest market for motorcycles. Countries like India, China, and Indonesia, where motorcycles are the primary mode of transportation for millions of people, are also seeing a shift in consumer behavior. In India, for instance, sales of traditional motorcycles have stagnated as the market becomes saturated and consumers look for more modern, environmentally friendly alternatives. The Indian government's push for electrification, including incentives for electric vehicles and plans to ban the sale of new ICE vehicles by 2030, is accelerating this trend. Chinese manufacturers such as Lifan and Zhongshen, which have dominated the low-cost motorcycle segment, are also feeling the impact as domestic demand wanes and they struggle to compete with more technologically advanced international brands. As prices continue to fall, the ripple effects of this market crash will be far-reaching. Dealers, already operating on thin margins, will find it increasingly difficult to stay afloat as inventory sits unsold and customers demand greater discounts. This could lead to a wave of dealership closures, further constricting the market and reducing consumer access to new motorcycles. For manufacturers, the challenge will be to survive in an environment where profit margins are razor-thin and competition is fierce. Many may be forced to consolidate or exit the market altogether, leading to a reduction in the variety of models available and further homogenization of the industry. In response to these challenges, some manufacturers are exploring innovative strategies to stay relevant. One approach is to focus on niche markets that are less susceptible to price fluctuations and economic downturns. For example, adventure touring motorcycles, which offer a unique combination of on-road comfort and off-road capability, have become increasingly popular in recent years. Brands like BMW with its GS series, KTM with its adventure range, and Honda with the Africa Twin have carved out a lucrative segment catering to riders looking for versatile, high-performance bikes. These models command premium prices, and their appeal lies in their ability to offer unique experiences that are difficult to replicate with other forms of transportation. If you like this video, please give it a like and subscribe to our channel. Also, could you leave your comments below and tell us, what do you believe caused this motorcycle market crash? We want to hear from you. Thank you for watching and see you next time.